Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. Another fine Saturday morning. Yeah, unbelievable out there, the weather. Hey, I got good news. First of all, before I get to that, I'd like to thank everybody that came out on Thursday night because that was tough. They had the parking lot was all tore up at the the Career Center, Cuyahoga Valley, not Cuyahoga Valley. Tri-Cities Corporate College. And so finding your way back there was not easy. And I appreciate all those that persevered and worked their way through that and showed up. And then I have this new laptop that keeps shutting off every 5 minutes. And that was a little disruptive. So, because I forgot how to set the settings in it. It was brand new. But so I really appreciate everybody coming out and all their comments. So there were a couple of things that I wanted to spend some more time on and get a little flustered and kind of forget. So my apologies for that. And I'm going to spend some time on that this morning. We talked about a 10-minute retirement plan, and I'm telling you, I thought I covered it, but with all the commotion and all the problems I was having with the technology, sometimes it's easy to think you did a better job than you did. and somebody was asking about it, so I thought I would go through that today. And you're welcome to email me at bill@bullingtoncapital.com. The retirement planning thing, I think, is everybody likes to make things so complicated. Basically, I think a large part of it is to just justify their incomes that they generate from making things complicated and making you think it has to be. There are a lot of complicated issues, but most of them are not applicable to everybody. So in the vast majority of people, it's relatively simple. What kind of retirement can you afford? That's where the 10-minute retirement plan comes in. And all you really need to know are the amount of savings that you have. And you need to know what kind of sources of income you'll have in retirement. Social Security, pensions. And where it gets a little bit tricky is if you have a business. You really won't know what the business is worth until you go to sell it. You can come up with an estimate. And actually, the accounting firm that I use does this for a lot of their clients. They come up with an estimate. They come up with the valuation when a company's trying to get ready to sell themselves. Somebody's getting ready to retire. So, but that's not all that frequent. So the vast majority of people, really, it's relatively simple. You get an idea of what kind of benefits you're going to get in retirement, whether, if it's PERS, STRS, police and fireman pension. You get a statement of benefits. You use that. Those are your sources, whatever sources of income you're going to have. And then you take your savings, and you want to limit your spending on the savings portion of it to somewhere between 4 and 6%. Now, it's going to depend on how aggressive you are and how much confidence you have in the economy. If you don't have a lot of confidence, you might want to go with the 4%. If you have a lot of confidence, you might go with the 6. If you're in your 80s, you might want to go with the 6. That's the kind of stuff that's variable. There is no right answer for. So if you're looking for a right answer, one that's going to be exactly correct, you have to actually know when you're going to die. You have to know that. Okay, then you can plan to the T exactly what you're going to need. But assuming that you don't, and I always tell everybody, look, assume that you're going to live forever, because you're probably going to want to leave something behind for family members or a charity, something that people remember you by. So your estate will go on long after you've gone. And any of you that are out there listening that have a trust, that was set up by a prior generation, you know what I'm talking about. So just pretend as though you're going to live forever, and then work backwards. So add up all your savings, and then whatever you feel comfortable with. And this is one of the areas that we're the consulting actually comes into play. Somebody like myself, just an investment advisor. We're going to take the savings you have, we're going to take the sources of income you have, and we're going to make some assumptions. Basically, how much you're going to take out, what do you think you'll be able to earn on that money, and you just work backwards, and it's relatively easy. It literally, for me, it generally takes about 10 minutes because I've done it so many times. So somebody that's brand new might take a little bit longer than that if you're doing it on your own. Now, we have a tool through Bullington Capital that allows people, clients. And by the way, I get a lot of questions from people that haven't received the email yet, and some people have already received the email and didn't get it and deleted it, which it happens all the time. Don't worry about it. But we're trying to get the emails out and trying to get everybody up to speed on this. But we're offering a service that allows you to go in and do a simple retirement plan. It only takes a few minutes. Once you've got your information put in there, it'll tell you what the likelihood of your money lasting as long as you do is. Or it'll give you an estimate of how long your money might last. And then it also gives a couple suggestions as to what you could do to extend that. And occasionally, you'll get somebody who has oversaved, overinvested, and based on their lifestyle, and it'll suggest that, hey, maybe you want to spend a little bit more money. So I think it's a pretty neat tool, but it's not a budgeting tool. I mean, it's not something that you're going to sit down and try to figure out. And this is the problem I have with cash flow analysis. You sit down, you try to figure out exactly what you're going to spend, and then you work from there. Well, that's pretty hard. I think that's incredibly hard, particularly if you're getting closer to retirement. You get closer to retirement, you pretty much know how much in savings you have. You know how much you're adding to those savings in each year, and you know approximately how many years you have before you're going to retire and start to withdraw money from those assets. So it's going through a cash flow analysis first, and then looking at how we're going to fit our portfolio to that. I'm not real good with that. I am real good with taking the assets that you have now and the sources of income you have now, and then fitting your lifestyle to that, because that's the best way to do it. And I rarely say stuff like that, like that's the best way, because there are a lot of ways to do a whole bunch of things. But my opinion on this is pretty staunch. I'm not backing down. The best way to do it is to take a look at your resources, not what you would like to have, not what you want to have, but take a look at what you actually have and work backwards. Fit your lifestyle to your resources. Don't try to fit your resources to your lifestyle, because what that means is a lot of you are going to have to earn 20 or 25% a year on your money to be able to do everything you want to do, and that ain't going to happen. So, just doing your best. And like I said, if you have questions, if you want us to do one of those 10-minute retirement plans for you, all I need to know is how old you are, how much in savings you have, and what kind of sources of income. That's it. That's all you need. Yeah, and I can tell you the types of retirements that you could afford, the lifestyles that you can afford. And when I say afford, what I'm doing is I'm putting the numbers into the software, and the software does this thing called the Monte Carlo simulation. It's really it's a fancy terminology, but it basically tells you what the chances are of you reaching your goals. So, and if you're going to come up short, it's going to point that out, and it'll offer suggestions that you can do. So, again, retirement planning is nowhere near as difficult. What kills me, on the way into the station today, I'm listening to a different channel, and I probably shouldn't say that, but I'm listening to a different channel, and some guy's giving advice there, and he's talking about trying to figure out exactly which Medicare program to use. And he's going with the cash flow. Here, this is going to be an expense. And then he adds up all the money that you're going to spend over somebody's normal lifespan, rather. And so, you're going to spend $250,000. Well, if you assume somebody's going to live to 95 and they retire at 65, that's probably true, because that's 30 years. 30 years. And when you add inflation to the cost of medical care and all that, it's a big number. But you don't have to set $250,000 aside for that, okay? Because you have income. it's going to come out of that income. And that's just one of the tactics I hear people using, and I just don't think that is effective. I think it scares people off. And other big expenses you might have. And by the way, if you want to do something like that with the software package I'm talking about, you could actually go in and take money out of the account, show it happening, and see what kind of impact that might have, whether or not you're actually going to run out of cash. So again, try to simplify things. That's what we're trying to do at Bullington Capital. Try to make it as simple as possible. You don't want to leave anything out, especially something that's really important. But it's not that hard. You don't try to fit your assets and income to the lifestyle you'd like to have, because what that normally means is you're going to have to create unbelievably exceptional returns. And the only way to get really high returns is to take a lot of risk. The way to get halfway decent returns is stocks, bonds, cash, run a balanced account, and try to keep your spending somewhere between 4 and 6%. And you want to adjust that. And you want to revisit that plan too. You make big changes. Let's say you had a great year. Let's say one of your stock portfolios did very well, or one of your ETFs or mutual funds. So you rebalance, and you're slightly ahead of where your plan was. So what do? Well, you can actually just do nothing, let that go into be part of the cushion that you have, or you might take a small portion of that extra money that you have in there and use it for something that you really wanted to do, and that would be great. But you need to come back and revisit that. And there will be other years where you've been taking money out of your accounts, and this is one of the things that really gets me into trouble with an awful lot of people, because they don't want their principal ever to go down. And I have to tell you, if you don't want your principal to go down, you're not going to make much money. So principal's got to fluctuate. If you have a year where the market hasn't done well and you haven't made much money, or you're actually negative, you still have to live. You can't just cut off your spending. So this is one of the reasons we always keep about 5 years worth of money in short-term treasuries. That's an exchange-traded fund that invests in short-term treasuries, so that you don't have to spend the stocks when they're down. If you're liquidating stocks when they're down, they don't have a chance to come back. And that's a big concept I rarely hear anybody talking about. So anyway, I wanted to go through that, and we'll go through these. And if you would like to call or send me an email, that's fine. Go to my website, bullingtoncapital.com. I'd love to change your name to protect the innocent, and even the ones that aren't so innocent. I'm just kidding. You can send some information there. Just give me your age. If you're married, that's kind of a good thing. If you still plan on being married when you retire, how much are you saving? What are your savings? And what is what sources of income do you have? And that's it. I'll put the numbers in and do it for you. It's not that difficult. In fact, it's really not that difficult. You could do this with an Excel spreadsheet. And I've been working on this ebook forever. I just, every time I write it, I look at it, I hate it, and I don't publish it. But I'm gonna have to get it out there one of these days. Just I'll hold my nose, I guess, and put it out there, because it is relatively simple to do. It really is. You've got X number of years before you'd like to retire. You're saving X amount of money, depending on the portfolio that you want to use. We can come up with some estimates. And the software, by the way, it does that too. It comes up with estimates on your portfolio. It'll project that out in the future for you based on what it's done over the past, not the short-term past, but the long-term past. And that's kind of a big deal. So, I hope that helps a little bit. And again, call us, email us, write us if you have questions regarding this stuff. Most of this stuff we can do over the phone. You don't even have to use your real name. I don't care. But I just felt a little bad after the seminar, because a couple people were hoping that I would spend a lot more time on this. And the reality is, there's not that much more to it. If you want to go through that detailed cash flow, the estate planning team does that. They also have a show here on WHK. They go through the detailed spending, try to forecast what future expenses might be for your family, and that's their style. Okay, my style is kind of the opposite. I'm a goal-based planning. I'm looking at, okay, here's the site. I already know how much I need to spend, and here it is. I don't need to analyze that. Great, that's awesome. Now all we need to do is work on the plan to get your assets to that level so that you can have that income that you already know about. If you don't know what your income needs are, and you need to sit down, and it's a very valuable service. So what the estate planning team does, my hat's off to them. I tend to like to do the opposite. There's the cash flow based, and then there's goal based. I like the goal based planning better. That's just my personal preference. And they're going to end up in the same place, by the way. They will. One route is a little bit longer than the other one, but that's okay. That's a lot of people, their personalities need that, and I understand that, and I get that, and that's why I'm not hesitating to mention these guys, because I think it's a great service for those people that need it. For those people that need to keep up with what they've got now, you have to pay attention. This is the week, by the way, where we actually start to roll this out to everybody. We've gone a little bit through some initial phases. I've contacted some people who I know are pretty computer savvy, and allowed them to sign up for this service. So if you're a client out there and you're wondering why I keep talking about this and you haven't seen anything, it's because we haven't been able to roll that out on a big level yet, and we will. And there are going to be questions. You're going to have questions. Feel free to give us a call. We're going to try to help you through that. Understand that this platform is amazing. It does an enormous number of things, and that we will actually have to probably stop occasionally when we get a question that we don't know the answer to. Contact the tech support that's supporting us and on the platform. Ask those questions and then get back to you. So it's not too hard. By the way, later today in today's show, some people have been requesting that I go back and talk about individual stocks like I'd done before, and everybody knows I run it's a really small hedge fund. I run a little over $1 million using this one particular technique, and it's very popular. So we're going to bring that back. The last portion of today's show, I'll talk about some of the things that we're doing, some of the things I see. It's amazing when you start looking at which stocks are moving right now, and then suddenly you start to see the headlines that are supporting that. It's not the other way around. You generally don't see the headlines ahead of the stock movement. You see the stock movement first, then you start seeing the headlines. And we'll talk about some of those stocks a little bit later in today's show. You're listening to Bill Bullington right here on 1420 The Answer. Stay tuned, because I'll be right back. And we're back. Hey, that was a flash on the commercial there, and I just got a text from him. He said he's going to swing by, and that he's going to have some tickets for the Homerama to give away. So that'd be pretty cool. Be good to see Flash. Used to be we actually did the show together for quite a while. That was pretty fun. Anyway, I said later we would talk about individual stocks, and we're going to absolutely. Something that we've had quite a few requests on, and feel free to request anything. Go to my website, contact us if you'd like me to talk about a particular item. And I did find out today, by the way, I am able to send out a lot of the material that we went over at the workshop. So we made an inquiry into a Morningstar, and I don't have to do them on a one-off basis anymore. Thank goodness. So that's cool. I'll be able to send out the copies of that. So everybody that came, I will send you copies of the one of the model portfolios we put up there. One of my favorite portfolios, if you are looking at kind of a more traditional approach, and it's slightly more traditional, but it's not. Here's the biggest problem with it. With the average fund. Right now, large cap stocks in the United States, U.S.-based large cap stocks have outperformed the other categories by a mile in the last 5 years. This year, that's changing. They're not number one anymore. but they have been for quite a while, right? In fact, since the correction, the big correction ended March of 2009, it's been the leading asset class. And that's pretty unusual for something to be that long. But of course, that crash was a little unusual too. So and I can tell you that that does not go that way forever. And when that ends, it ends kind of badly. So having the other asset classes, that's very important. It's incredibly important. From an investment standpoint, I mean, if you're a fiduciary, you're responsible for other people's money, you're not allowed to just keep piling into the things that have just gone up the most. They pay you to know more than that. But so I think it's pretty interesting. You're starting to get some shifting going on there. And now's a pretty good time to be looking at a model like that. That's why I brought that out at this particular time. The other thing I think is really made an unbelievable amount of headway over the past few years, just the past few years. Socially responsible investing. There are funds out there who won't invest in certain types of companies, companies that go against somebody's set of moral standards. And in the old days, a lot of those funds really didn't do all that well. But these days, a lot of them are doing very well. And it's been a growing category. So that's actually what the next seminar is going to be about, socially responsible investing. Can you make money and be a socially responsible investor at the same time? Okay. So we're going to look at socially responsible investing and the opportunities it presents. Investing profitably with a conscience. Who'd have thought? That's basically the description on the website. And I believe you'll be pleasantly surprised by the latest research. So part of the accredited investment fiduciary program is I bought this database, or actually I subscribed to it. So for a mere $2,500 a year, you have a screening tool to use on another database that you got to have that's significantly more expensive. But be that as it may, I went ahead, sucked it up. I got the subscription, so you guys don't have to worry about getting one. You can go to the next seminar, and I'm going to show you the best socially responsible, well, I shouldn't say the best, the funds that have had the best overall returns in each of the categories, major categories that make up the stock market over the past several years. And I'll even talk about those that I think can continue along those lines. Because one of the things we talked about at the seminar was also that the Stock Picking 101, which we'll talk a little bit more about later in today's show. And when you look at how to pick stocks, if you know the basics, if you've got the basics down, it's the fundamentals. It's 95% of picking stocks. And the 95% is very easy. So if you're not going to be a full-time portfolio manager, knowing the 95% is enough. It is enough. If you're going to be full-time portfolio manager, then you're going to need the other 5%. And it's a bear because to get that last 5%, you're going to put in an enormous amount of effort to get that last 5% of the knowledge that you really need. And then it's not going to help your returns that much. That's what we want to do, isn't it? It's been an incredible amount of time learning something that doesn't help much. So anyway, if you know the basics, this is where this helps. I think everybody on the planet, everybody ought to be responsible for a portion of their own money. I think you all should have to do that. Why? Two reasons. First of all, you won't be able to identify other portfolio managers who have skill if you don't know how to do it yourself. You won't. Secondly, it'll help you pick those portfolio managers and understand what they're doing. And when you get into a fund like a socially responsible fund, they call it SRI, by the way, socially responsible investing. And when you get into those, you want to make sure that the companies that they're investing in are companies that you'd be comfortable buying yourself and aren't paying too much for. And that goes with just about any fund, as a matter of fact. So anyway, that was why we did the Stock Picking 101. We'll do that at most seminars. And I'm going to actually come back to these topics in a little bit because my good buddy Flash is in the office. How you doing, Flash?
I'm doing good. Your former co-host.
Yes. I was telling him about it when you're pulling up in the parking lot.
Yeah.
Yeah. This is awesome. So you guys are doing the Homerama again, right?
Well, yeah, it's the first time in almost a decade.
Wow.
And I got some homes here I'm just going to share with you. And those of you listening right now, if you go to the HBA website, hbacleveland.com, you can see what we're talking about here because these homes are absolutely spectacular. We're talking homes that probably start about $1.7, $1.8 million,
Wow.
and they go to like $3.6 million. And the $3.6 million one is a ranch, and it's all stone. The flooring, and you would appreciate this because I know your dad was a builder.
Yeah. Yep.
And so you know what craftsmanship is all about.
Right.
It's just amazing what they were able to accomplish in some of these homes. The ranch normally would take about a year to put together. They did it in 8 months.
Wow.
And it's just a fantastic event. But it's more than just the homes. I mean, it's a family-friendly event. We got a full basketball court there. We've got Playground World. We've got a ton of giveaways if you go there, if you go to the website, hbacleveland.com. But if you keep listening to us, I'm in a very generous mood, and I'm going to give away some tickets.
That sounds good.
The only thing is I'll leave them at the gate because it goes until next Sunday, and I just don't want to get them in the mail and have them show up before the event is over.
Right. Okay. Well, that sounds good. Yeah, actually, I've got a caller in here. Maybe he's calling for a pair of how many tickets are you going to give away today?
As many as you want. I got. Look at the stack I got here.
Oh, that's awesome. Just, you got to put 4 of those aside for me.
Okay, no problem. No problem. They're over here.
All right. You're going to go to the phones. Hey, Jerry.
Hey, William. How you doing, buddy?
Good. How you doing?
Good. Sorry I didn't make it to your expose on Thursday. Things got a little ahead of me, but I hope it was great.
Oh, it was interesting. That's for sure. You should have seen the obstacle course you had to drive through to get in there. It was the whole parking lot is being redone, and it's dug up. It's about 2 feet deeper than it was the last time we were there, and it's not done. But it was fun, and I really appreciate all the people that came out too. Yep.
Hey, I got a question for you. You're not going to find this on your any of your Momentums or other screeners, but I was reading, how do you think of Kroger right at the moment? It's been taken a bit of a whipping, and, like some of the retail stocks have obviously been affected by this Amazon thing. Its value looks to be fairly decent. Cash flow's okay, and they're paying a solid dividend.
Well, actually, I haven't looked at Kroger in a really, really long time. So I would actually, and to do that type of research, I wouldn't be able to spit that out on the radio.
Okay.
It doesn't. It would require probably at least an hour in looking at it. Everything you need to look at for an old line established company like that. It's minimally an hour, and I know there are probably a lot of analysts going out there. Oh my God, they're going to spend a week on it. I know they will, but if the main criteria that I look for is really it's valuation. That's number one. Is just valuation, and if it's got a decent valuation, then I'll look further into it. If the valuation stinks, then why would you want to keep looking at it?
Of course.
Yeah. So this one's let's see. I got Kroger. Is that the company?
KRO is the symbol.
Okay.
It's been around for 130 years, I guess.
Oh, I remember when they were in Cleveland.
Sure, absolutely. I was growing up as a kid.
Okay,
Yeah.
KRO, Jerry, is Kronos Worldwide.
Oh, boy.
So
KRO?
Yeah. Kroger is KR.
Yeah, I was just going to say
KR,
so.
okay, excuse me. Okay.
Okay, you're killing me here.
Okay, I'm sorry.
I pulled that up. Yeah. Okay, so it's got a $118 billion in revenue and a $20 billion market cap, which is not unusual for grocery stores because their profit margins are extremely skinny.
Very slim, yeah.
Well, but that's the net profit margin. Their gross profit margin is 21%. Okay, so just on the profit margins alone, I'm not like super enthused and it's selling right around where it should at this current price. And I know it was selling for a lot more than that a little over a year ago, but I'm not sure what happened at that point in time. But so I wouldn't, just looking at the numbers, the most important numbers, the sales and the profit margins, those are the two most important numbers you can look at.
Yeah. Yes, sir.
What are their sales? What are their profit margins? Just looking at that, I'm like, I'm just not that interested.
It's not an overwhelming value yet.
No,
Still
not,
got a little
not
ways
yet.
to go.
Right.
Okay.
Yeah.
All right. Well, I thought I would just ask. As I say, it was written up on a couple of websites and whatnot, and I figured that it might be worth taking a look at. Some of the beaten up retailers. Home Depot I still like. I think that's seeming to do okay.
Yeah, I don't. Again, if I go back and I pull up Home Depot, revenue $97 billion, market cap $186 billion. It sells at 52 times book value. The profit net after tax profit margin is pretty good. It's close to 10%, which is pretty wild. But that gives you a price to sales ratio of 2 if all other things being equal, and that's right where that stock is at.
Okay.
So it's not a compelling bargain at its current price, and the growth rate on it is it's relatively small.
Right.
And it's hard to grow when you're doing $100 billion a year in sales. To
big move. You do 5%. Sure.
Oh yeah, I mean yeah.
Big move.
So it's a good company though. I mean they're great companies, but they're just not attractively priced today. And maybe that changes, 6 months from now, a year from now. Sooner or later it'll change. Next time we get a big crash, it might, those are good stocks to go in and really take a close, hard look at.
One last one I was following, you've mentioned a couple times, is Square.
Yep, I still own it, by the way.
Okay, you do still own that.
Yep.
Okay. At this point, you're not a buyer on it. You're a holder, though, correct?
I'm a holder, yeah.
Okay,
Yep.
Very good. Okay, thanks so much for your advice, Bill.
Hey, thanks for calling.
Have a great day.
Yep.
Bye.
Yeah, I use the analogy a lot when you're looking at stocks of real estate. So if you want to, if you're going to buy a house, you typically, if you're going to buy a house in an established neighborhood, now I know that has nothing to do with the Home-A-Rama. Because you will not find another house in a neighborhood like the Home-A-Rama homes.
Yeah. Well, actually, it's in Barrington. So,
you might find one then.
Barrington is right by the Bertram Inn over there. And my gosh, this was started by the Wolsteins, and Bart has passed away. His wife, I just met her last week, and she's at 88. And the son is developing the East Bank of the Flants right now.
Oh wow!
So, but Barrington, yeah, it's a whole different world over there.
Yeah,
there's some huge homes.
Yeah.
Amazing, just amazing. Yeah, you're talking CEOs and CFOs and doctors and lawyers that are living over there. But the thing of it, granted, 98 or 99% of the people are not going to be able to afford these homes.
Sure.
But here's the point, and this is what we try to make with marketing Home-A-Rama. You get some great ideas.
Absolutely.
That's the thing. You go in there, and the biggest takeaway I can tell you right now, Bill, is the open floors, the open spaces.
Right.
There used to be walls around a kitchen. There used to be walls around a dining room, a living room. You don't even see living rooms anymore. They're family rooms. The living room is gone. Yeah. But it's all open. You go in, you see this majestic space, and you see these big ceilings. I mean, the one home there that's prestige, they're 11-foot ceilings.
Wow.
I mean, it used to be 8 feet. Now it's 11.
Yeah, that's that is pretty cool. I like seeing the technology that they have.
Yeah,
that blows my mind. The some of the stoves that they had in there. I think that's where I first saw this one stove that it had a combination of microwave, regular convection. Well, that's not regular. It's actually a premium type model, and then it had quartz for browning. And you could literally cook a full, like a 16-pound turkey, 45 minutes.
Isn't that something?
45 minutes, and they have that in one of the Home-A-Rama homes.
Yeah, good stuff.
Yep. Hear the commercial, the music. We got to take a real quick break. You're listening to Flashin' Bill on 1420. Stay tuned. We'll be right back. And we're back.
Living on sponge cake.
Yeah.
Watching the sun bake.
Yep. Going to the Home-A-Rama.
That's right. Going to the Home-A-Rama, baby. We should open up the lines and give away some tickets. You want to do that right
absolutely.
now?
Yep. If you want to call in, 216-901-0945, 216-901-0945. Free tickets to the Home-A-Rama. And you said it's going to be held at Barrington this year?
Yeah, it's at Barrington. We started last Friday, September 8th. And it's not every day of the week. We have special days like for Sherwin-Williams, for realtors. But we're open today. We're open tomorrow. And what I encourage you, I'm going out there right from this show. So if you call in right now, I'll put your name on an envelope and give you the tickets that you need. I don't want to put them in the mail. We wrap up this event next Sunday, September 24th. And here it is. It's today. It's tomorrow. We're closed Monday, Tuesday, Wednesday. We reopen Wednesday, and we're calling that Ladies' Day. So that's September 21st, 22nd, 23rd, and we wrap up on the 24th. And you want to get some information, I mentioned the homes that we're featuring. It's all on hbacleveland.com, hbacleveland.com. And we got some premier builders in 84 Lumber. Oh, by the way, I was telling you about giveaways. 84 Lumber, big lumber company. They're giving away $8,400 in kitchen or bathroom cabinets.
Oh, great.
So if you go over there, we have a Home Expo Pavilion. We've got Pella windows. We've got these cool recliners, and that's another hot spot of the show because it's filled. All these people are these recliners. I mean, you basically pass out on them.
Oh,
They're so laid back. I mean, you get a total massage.
Awesome.
And that's in the Home Expo tent. So lots of good stuff. Bring the whole family. Have some fun. Children under 12, by the way, if you can't get in for those free tickets, children under 12 are free. Okay?
Great. That's awesome. Yeah. I love the home run. My dad was a small remodeling contractor, and we did a ton of stuff like that. And the technology, it is mind-boggling. I would know how to do nothing today. They're not doing anything the same. Well, the basics are the same, but all the materials have changed.
Yeah.
I mean, it's unbelievable. And the engineered materials are like even the floor joists.
They're even better
than
what they used to be.
Yep.
I'm getting a new floor. I redid the kitchen in our house last year, and I was just amazed at the products that are on the market today. And now we're doing our bedroom. In fact, we got a bedroom set from Basista Furniture. You want to get good deals, go to Basista Furniture because after 97 years, they're going out of business. And we picked up a bedroom set. My wife said, well, that means we have to paint the walls. And I don't like this carpeting. So and then she says, you know what? I don't want carpeting. I want a wood floor. And instead of getting a wood floor, we're getting, it's actually vinyl.
Yeah. I got it in my kitchen.
And it looks like wood.
Yeah. Yeah. And you can't break it.
It's commercial grade, pretty much.
Right.
You can't do anything. You could spill whatever you want on it, and it stays the same.
Oh, I tried to beat the snot out of mine just to test them because I didn't believe what they were saying. That stuff is it's indestructible.
Yeah.
If you have pets or you have little kids, this is like mandatory.
Yeah. We did that in our family room some years ago because we had cats, and the cat got sick, and the cat got ugly in the dining room, and we couldn't do anything with the rug, so we pulled up the rug and decided to put in a wood floor. But that was the dining room. But I don't think I'll put any wood in anymore if I have to redo it. I'll go with all the composites because I think they're better made.
They're better. They're going to last longer.
And they're going to last longer.
They're lighter.
And with wood, it scratches. You got to refinish it. I mean, there's a lot of problems with it.
You know what I do? I run my vacuum over it.
That's the way to do it.
That's it.
Yeah. It's cool. But, the industry, we were talking earlier about the fact that this is the first time in almost 10 years. It was in 2008. And, Bill, you know this all too well. You know what happened in 2008.
Oh, sure.
I mean, the whole industry, the financial industry, the housing industry pretty much collapsed. And a lot of builders, either they went bankrupt or they merged with other builders. It really affected the industry. And it was really tough here in Northeastern Ohio. So the whole idea here that a lot of the industry, not everybody is able to keep up with their mortgages, but it's a whole lot better today than it was back in those years.
Oh, by far.
And this is a celebration that we want to celebrate the home building because the home building industry is a key component to the economy.
Yeah.
When you think
somewhere
about
around 15%, which is huge.
When you think about how many components go into building a home, and then what happens when you're done with the home? You got to decorate it. You got to furnish it. Sure. There's more there. You got to landscape it.
We were just talking about this at the seminar on Thursday night. There's no way for one industry to do extremely well without trickling through all the others.
Right.
because those people that are installing that new stuff, all the flooring, they drive cars, wear clothes, eat food, and live in housing.
That's right. That's right.
So it permeates through the whole thing. And there are a lot. In fact, there's one stock I just thought I should just buy, and I'm glad I didn't because it's about the same place it was for like 5 years ago. But just because I liked it so much, and it's called Interfacia. They make tile, and its symbol is tile, carpet tile.
Yeah.
You've probably seen it in a bunch of hotels. You don't realize it. The tiles are very decorative. Architects love it. They're different shades, colors. You name it, they can make it. But what's really cool about it, and if I had it to do all over again when my kids were babies, I would have this in my house because they do have stuff for houses. And you spill something on it and stain it, and you can pull that tile up and replace it with the tile. Nobody knows the difference.
Isn't that great?
Yep. So
whole different world we live in today.
It absolutely is. I got to take a quick phone call. I got Scott on the line. Scott.
Hi, Bill. How you doing? I heard you guys are giving away Homerama tickets.
Yes.
I could use two. I was heading out there actually this weekend.
Oh, great.
That'd be great.
Yeah, hang on. We'll get your address. Or I'm sorry. We'll get your name.
Just give me a name. That's all.
And then we'll have them saved for you.
Okay, fantastic. Thanks so much.
Sure.
We'll see you there.
Thanks. Yeah, and if anybody else wants tickets, 216-901-0945. You can probably email me. I'm assuming if I forward you an email.
Yeah, we can do that.
All right. So
just send it to me, and I might even do a call in. I don't know if I can make it here next week, but next week, as I indicated, is the last weekend for it. And the weather is just phenomenal out there right now. So we're expecting a pretty good crowd today.
And by the way, so here's how I'm going to tie this in too. Let's say you're going to Homerama.
Yeah.
You like stuff that you see there. You might want to bring with you a GoPro camera to take pictures of it, so you can download it when you get home and go out and Google search it, find it. And the reason I say that is because GoPro came up on one of my scans.
Okay, now you got to help me out here. What's this GoPro camera all about?
Oh, it's a little tiny camera. It shoots in 4K at super high resolution. Yeah. And anytime you see people doing like jumping out of airplanes and filming themselves, 9 out of 10 of those cameras are a GoPro camera.
Really?
Yeah. And they got this really cool website where you can actually go and upload and edit your video right on their website.
No.
Yeah, it's really cool.
Wow.
Anyway, the symbol is GPRO.
GPRO.
Right.
All right.
Its price to sales ratio is 1.2, which is not very high for that type of company. It's been a lot higher. It's right around $11.52 is what it closed at on Friday. Mm-hmm. The stock was as high as $80.
Oh boy.
It was as high as $80. So this is pretty cool. And this is here, I'll show you. This is a classic breakout pattern. See the high volume there? The last two times it went up a lot, really high volume. See the base that it's breaking out of? That's kind of a classic.
What did it go down to about?
It got down to it looks like it was, I know it was under $7. So it goes from, it goes right around $7 from $80.
Now, when was it $80?
Let's see.
Going back a few years?
No, actually 2014. That wasn't that long ago.
No.
It's only 2017 now.
3 years ago. Okay.
And it's a really super cool product. And it actually created its own genre, just like what's his name did with the iPod.
Yeah.
So this was the first of these handheld cameras where people were doing sporting events and recording themselves. And you can shoot. You could use it for regular video.
Yeah,
And they're relatively inexpensive too. The quality of the shoot is awesome. Now, it is technology, and you know how fast technology changes, right? So they have to stay on top of that. And that's why the stock came out so high and then dropped so far. Sony decided to put a lot of money into their equivalent version of that. And since then, Sony's had so many problems in so many other areas, they've actually pulled back a little bit.
Wow.
But,
you bring up Sony. What do you think of the Walkman?
Oh, yeah.
Remember
how
many ages that was ago?
Oh, I know. I was a freshman in college. I remember that. My mom and dad got me one for Christmas. And I was thinking, holy cow, I can't believe they spent, it was like $70. That was a lot of money in 1981.
Mm-hmm. And they owned the market back then.
Yeah.
And now you'll take a look at the iPhones and all that and what they have become. But it's funny. You mentioned it was $80. It's now $11. And I'm laughing. You know why?
Why?
What have you always told me, Bill? Buy and hold. Buy and hold.
Yeah, right. That's he's being facetious. He said I would make fun of people that would say that.
Buy and hold.
Right. Yeah. That's
there you go, buddy.
That's a tough one. Got to buy and manage. And I don't know what the price of sales ratio was on that when it was 80. Holy schmoly. That had to be crazy. So,
What do those cameras go for about?
It really depends. You can get a low-end version around $300. You can actually probably buy a used one on Craigslist or eBay for relatively inexpensive, and then you can go up to $700 or $800 somewhere on there.
Mm-hmm.
So they're not super expensive, but the stuff they do, man, the footage that those things have captured, it's unbelievable. Some of them actually they built a harness for their dogs to hold the GoPro.
Oh my gosh,
that's pretty cool. But anyway, the symbol is GPR. I have to disclose to everybody, I bought this stock yesterday. Oh. So I have to disclose that. And, it was up a little bit today, but the pattern, it's under accumulation. Mm-hmm. So I do not know how long it goes. If it goes down 10% from my purchase price, I'm out.
Yeah.
See ya. This is the more aggressive money that I run on my own, and we are going to talk more about those in the future. I'll even cover this probably at every seminar going forward because people really like this stuff. It's kind of easy now. The TC2000 I'm using right now is actually in a web browser. You don't even have to download the software anymore. Mm-hmm. And I'm thinking I might even put I have several licenses for that. I might make one available to the public so they can see the same scans that I'm using, and that'd be kind of cool.
Cool.
So anyway, hey, thanks for coming in.
Hey, thank you. I appreciate the time.
Yeah.
Always fun talking with you.
Yep.
I'll always learn a lot.
Oh,
I know where I'm going shopping.
Yeah. All right, everybody, you've been listening to the Bullington Capital Report here every Saturday morning from 11 to noon. Have a good week, everybody. Good luck and good investing.
Report, broadcasting every Saturday at 11 a.m. on AM 1420. The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and or investment strategies recommended and or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional. The preceding program has been paid for by Bullington Capital Management, LLC.